To many Ugandans, investments and wealth is seen through tangible assets like goats, cows and land. But truth is, those just form part of the investment options available in Uganda. Today, there are many people and institutions making a lot of money through buying and selling of stocks in companies listed at the Uganda Securities Exchange. But what exactly does this process entail?
It literally means that you are going to invest in companies that have given out their shares to the public. You actually buying stock, you're buying into companies, you're buying shares in companies, which are also called stocks. Yeah.
This ideally means that without having to put in any work in the establishment of an enterprise, you can still buy shares in that company and still profit from its good performance. However, experts advise that much as this could prove profitable, before delving into the stock market world, it helps to get professional guidance from brokerage firms in order to make the right decisions.
They try to do research on these particular companies, and they get to know what's happening in these companies, what are the prospects of this company in the short term, medium to long term.
The beauty with trading in the stock market is that it's not as demanding as many other businesses. This therefore means that you can concentrate on another money-making venture while also benefiting from the stocks or share you acquired in any given firm.
I believe the stock market provides an avenue of investing in something where you really do not have to put in a lot of your time to manage the investment. Why? Because in most cases you're investing in companies that already have structures. You're investing in companies that have already grown over time, that have management. So you're actually putting in your money, but won't have to put in a lot of your time to manage this money.
It's however important to note that the stock market is very dynamic since it's usually susceptible to shocks in the economy. This therefore means that you have to know when to sell your shares or when to buy. This, however, does not mean that any upward or downward movement in the stock prices symbolizes a buyout or a sellout. Every move you take should be well measured.
Overall, what should motivate your movements, when to sell out? In most cases, it's if you have actually made the money. For example, when we buy in the shares in the stock market, what we are looking for is to sell them at a premium. What I mean by that if I bought each share at 50 shillings, I would want to sell it at a slightly higher price. But secondly, again, like I said, you have objectives for investing. So if you feel your objective is achieved, then that's the time you should sell out.
Investors in stocks earn money in two ways. One is through selling shares they already have, and two is holding on to those shares and then earn a dividend, always announced at the end of the financial year. What is not in doubt, however, is the fact that this is an investment line with a host of uncertainties, and the decisions you take have to factor that in.
The challenges that we look at, like I said, is that these stock prices can go up and down. And secondly, like much as we have research departments, we are not gods, so we try our best to really forecast what we think will happen, but there are some things we can't see, we can't foresee. So at times we may advise something and probably it goes the other way around.
When it comes to doing business, it's usually the most innovative and unique idea that wins. It therefore gives you an edge in terms of benefits to venture into the fairly unexploited field, but which also provides good returns. Investing in the stock market provides this solution, having relatively few local participants, but also offering a better return on investment. Ingrid Nantege, NTV.